Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 51, published on February 12th, titled Sustainable Stocks for Your Portfolio, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts, and Google any terms that are unfamiliar to you. Though not described as ESG stocks, most ESG funds hold many electronics stocks. Here's an article titled 4 Top Electronics Stocks to Buy from a Prospering Industry from Zacks, and it's by Aniruddha Ganguly. I'll first mention the name of the recommended stock, followed by some brief comments by Mr. Ganguly. 1. Brooks Automation. This Chelmsford, Massachusetts-based company is benefiting from robust growth in its life sciences business, driven by COVID-19-led demand. Moreover, this global provider of semiconductor manufacturing automation solutions and life science sample-based services and solutions has significantly expanded its life science clientele. Markedly, China also offers significant growth opportunity for its life sciences segment. Moreover, solid demand for contamination control solutions remains a key catalyst. The Zacks consensus estimate for its fiscal 2021 earnings has moved up 5.5% to $1.72 per share over the past 60 days. This Zacks rank number 1 strong buy company has gained 97.5% in the past year. 2. Cohu. This Zacks rank number 1 company is gaining from the rising demand for its semiconductor test and inspection handlers, micro-electromechanical system test modules, test contactors, and thermal subsystems in the wireless mobility market. Improving automotive and industrial and rising demand for EVs bode well for the company. Moreover, shortage in auto chip supply is expected to increase capacity that bodes well for Cohu, which has a strong presence in the EV and ADAS market segment. Cohu has solid growth prospects in test, handler, and inspection markets in the long haul. The Zacks consensus estimate for its 2021 earnings has risen 17.4% to $2.56 per share over the past 60 days. Cohu's shares are up 89.9% in the past year. 3. Ultra Clean Holdings. This Hayward, California-based company is benefiting from an expanding clientele, robust demand for its parts cleaning, surface encapsulation, and high-sensitivity microcontamination analysis solutions is a key catalyst. Moreover, recovery in wafer fab utilization bodes well for this Zacks rank number 2 by company. Further, the company's strong exposure to etch and deposition market, as well as an expanding global footprint, is a major positive. The Zacks consensus estimate for its 2021 earnings has moved up 2.7% to $3.03 per share in the past 60 days. Ultra Clean shares are up 72.9% in the past year. 4. Entegris. This Billerica, Massachusetts-based company provides microcontamination control products, specialty chemicals, and advanced materials handling solutions for manufacturing processes in the semiconductor and other high-technology industries. This Zacks rank number 2 stock is benefiting from solid demand for its leading-edge solutions in advanced technology nodes and increasing need for end-to-end contamination control solutions. Further, the acquisition of GMTI strengthens Entegris' position as the premier supplier of yield enhancement solutions for the semiconductor market. Markedly, the consensus mark for its current year earnings has inched up 1.1% to $2.82 per share over the past 60 days. Entegris shares have gained 97.1% in the past year. End quotes. You might have heard some sirens in the background here. Sorry about that, but it comes with the show, unfortunately. Okay, so now on with the show. This second article is titled Sustainable Investing, 5 Stocks to Check Out, and is by Yelena Mandenberg. It was published on the gritdaily.com site. Though she covers some familiar ground to other posts in these podcasts, Ms. Mandenberg does have some new companies you can check out. I'll again mention the company she likes, followed by a few of her remarks about that company. 1. Brookfield Renewable Partners. Focusing on renewable energy, Brookfield owns nearly 1,000 power-generating facilities worldwide, with their portfolio including hydroelectric dams, wind power, and solar power. They're also well known for a focus on community engagement, employee well-being, and social responsibility. Their stock is a slow grower, but overall profitable, with increases to come through the next few years as the company plans to continue to buy and create renewable energy facilities. 2. Vestas Wind Systems AS. This Denmark-based company develops, manufactures, and installs wind turbine systems. They work with countries around the globe and are soaring in popularity. 3. First Solar Inc. They design and manufacture photovoltaic solar power systems and solar modules around the world. As the popularity of solar energy increases, you can expect their stock to keep going up. 4. Beyond Meat. Another industry that's doing incredibly well is sustainable food. The company Beyond Meat is popular and profitable to invest in, as many eateries and fast food companies are now relying on this product for their increasingly health-conscious or vegetarian customers. A study recently showed that this alternative meat company generates less greenhouse gas emissions, uses less energy and resources, and less impact on water and land than traditional beef companies. 5. Clean harbors. As other companies struggle with spills, cleanups, and making changes to their own brands, they rely on companies that already know how to do that. Clean Harbors is particularly known for helping to clean up after the Deepwater Horizon explosion and the 2010 Gulf of Mexico oil spill. They continue to provide emergency spill response and hazardous waste management services." End quotes. Now, one of our great analysts, Matthew DiLallo of the Motley Fool, has written a piece titled 3 Top Infrastructure Stocks to Buy in February. Many ethical and sustainable investors have infrastructure stocks in their portfolios. Here are his 3 recommendations, followed by some brief remarks by him. 1. Atlantica Sustainable Infrastructure. Overall, 69% of its income comes from renewable energy production, 15% from the transmission and transportation of electricity, 13% from natural gas-related infrastructure like power plants, and 3% from water desalination facilities. Atlantica pays out most of its cash flow in dividends, offering a higher yield that's currently around 4.1%. Atlantica aims to invest $200 million to $300 million per year on new infrastructure additions, which should support steady dividend growth. 2. Brookfield Infrastructure is one of the biggest infrastructure operators in the world. It operates transportation, energy, and data infrastructure, as well as utilities. Long-term contracts or government-regulated rates back 95% of its revenue, providing it with highly visible cash flows. Brookfield pays out the bulk of that money via a dividend that currently yields 3.7%. The infrastructure giant uses the cash it retains to help fund acquisitions. It has invested about $1 billion on new additions in recent months, highlighted by a telecom tower portfolio in India and a stake in a large-scale U.S. LNG producer. 3. Crown Castle is a real estate investment trust focused on operating communications infrastructure. The company owns a leading telecom tower portfolio in the U.S. and a rapidly expanding network of small cells and fiber optic cable to support the country's 5G rollout. The company leases space on this infrastructure to mobile carriers under long-term contracts that provide it with stable cash flow. Crown Castle also pays out most of those funds to investors via dividends, with its payout currently yielding 3.4%. The company expects to be able to grow its cash flow at a 7 to 8% annual rate for at least the next decade. End quotes. So to our final post. It's titled, Making a List of the Best Stocks to Buy Now. 3 renewable energy stocks to watch by Jonathan Phillip and was on Nasdaq.com. As usual, I'll mention the company name followed by brief comments from the author. 1. Aemetis is a California-based advanced renewable fuels and biochemicals company. Its development pipeline is focused on the reduction of carbon intensity. Aemetis seems to be firing on all cylinders for now. Could this mark the beginning of another great year for Aemetis stock? 2. Orbital Energy Group. The company is working towards creating a diversified energy services platform. Orbital's group of businesses include its gas systems, power services, and solar services. The company has also been doing well financially. This included year-over-year jumps of 124% in total revenue and 134% in cash on hand. 3. VivoPower International. VivoPower is an international renewable energy tech company. It is involved in the fields of battery tech, electric vehicles, and even solar and critical power services. VivoPower announced that it closed a $250 million agreement with Australia-based GB Auto Group. Through the agreement, GB will become the exclusive distributor of VivoPower's Tembo Toyota EV conversion kits in Australia. According to the report, it is the biggest deal for EVs in the Australasian region to date. End quotes. Well, these are my top news stories with their stock tips for this podcast. Sustainable stocks for your portfolio. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in iTunes, Apple Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on February 26th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.